The Checkpoint is presented by GM Pharma, the first international multinational pharmaceutical company in Georgia. GM Pharma, to serve those who need it most.
In the October issue of Forbes Georgia, you can also read about the world's most profitable banks. We will provide you with the update assessment of Georgia's banking sector by Fitch Ratings. According to the most recent report, the pressure from the pandemic on the Georgian banking sector has reduced amid the strong economic growth, but asset quality remains key to banks' credit profiles. The Checkpoint sat down with Alyona Agrenenko, director at Fitch Ratings, for a short talk on the sector. Let's start with the overall assessment of Georgia's banking sector. Could Fitch Ratings say that this sector showed its resilience in the tough times of pandemic?
At the onset of the pandemic, as you know, the banks had to create over 1 billion of preemptive reserves that should have helped them to create, to preserve against any potential asset quality deterioration over the whole cycle of the crisis. And banks also offered credit holidays to all retail clients and to legal entities from sectors that were most affected by the COVID. So the uptake was really very high, up to 60% of total loans, and there was a pretty high risks that the bulk part of these loans could become non-performing. But it didn't really happen, and we see that the majority of borrowers have returned to regular loan repayments. And now, thanks to high economic growth, the improved business activity, the bank's profitability is now back to the pre-pandemic levels. So overall, we can say that the impact of the health crisis on Georgian banks was really lower than we initially expected.
I remember, Alyona, Fitch Ratings calling NBG's decision to preemptively create these buffers for banks quite a unique decision. How that looks from this perspective? Was it the right decision to do so?
Well, it was indeed a unique decision, because in other banking sectors we saw that the regulators were, on the contrast, introducing some forbearance on creation of reserves to help banks cope with the challenges of the crisis. But now we see that probably that was a good move, as the banks created these one-off lumpy reserves in March 2020, and in the consequent period, the additional loan impairment charges were pretty limited, and some banks even they recovered some of the provision previously created because of the good performance of the loans. So yeah, that was probably a good move.
Yeah, and also, can we say on the Georgia's banking sector's side now that this decision worked because banks were in a good shape, so to say, and they could meet this regulation?
Yeah, they could meet this regulation because thanks to the implementation of Basel III capital requirements, the Georgian banks really build up quite sizable capital buffers. And at the onset of the crisis, when they created these one-off reserves, the banks' capital levels, they dropped. But at the same time, the National Bank eased some capital requirements, namely the capital conservation buffer was eliminated completely. The CICR buffer was reduced by 2/3. So overall, the banks' headroom above the minimum requirements remained pretty reasonable, and overall their capital metrics remained quite adequate, I would say.
Let me read out one very interesting quote from the report, the recent report. We believe that downside risks to asset quality remain and are contingent on the direction of the health crisis, while the performance of the restructured exposures remains highly dependent on the path of economic recovery, in particular in tourism and related sectors. Please elaborate a little bit on this.
During the pandemic in 2020, we saw an increase in sector NPLs, which is of course explained by the slowdown of the economic growth, by the depreciation of lari, by the lockdowns. But now this year, from the second quarter, we already see that the NPLs have started to reduce. However, we do see still some downside risks here. So first of all, unfortunately, the health crisis is not over yet. And in case of some further quarantine measures or lockdowns, banks might have to offer some additional credit holidays to borrowers, which could potentially lead to an increase in restructured loans. And if this is coupled with lari depreciation, that could make things even worse because of high lending dollarization, which is now above 50%. But even if the situation with the health crisis improves, we still need to watch very carefully the performance of the loans restructured during the pandemic. So according to various estimates, the share of restructured loans in the sector is about 20%. And the bulk part of restructurings was performed in sectors that were most vulnerable to the pandemic, such as the tourism-related ones, such as some real estate developments and some other ones. So we really need to watch how these particular segments recover from the crisis, when the tourism revenues will be back to the pre-pandemic levels. That would be crucial for the performance of these restructured loans. So to summarize, we think that the asset quality risks are still there and we really need to watch them pretty closely.
High lending dollarization, you mentioned this, and we can read in the report that this also makes banks borrowers vulnerable to local currency fluctuations. Reduction of dollarization in the system is likely to be a lengthy process requiring availability of long-term lari funding. What do you mean under lengthy process? And do you think NBG should take further steps in this direction? I mean, further active steps to curb dollarization, also considering that we are still in pandemic.
So answering the first part of your question. So by the lengthy process, we mean that the process of de-dollarization will take time because the key driver for high lending dollarization is the high share of dollar funding and lack of long-term funding in the local currency. And as the main source of funding for Georgian banks is customer deposits, and about 60% of them are denominated in dollars, most of them attracted from the individuals. And as we know, the population still prefers to make savings in dollars, largely due to the track record of lari volatility and periods of high inflation. So in order to build up trust in the local currency, really we think that an extended track record of stable lari and of low inflation will be required, and it takes time.
Second part of my question, whether or not NBG should take further active steps to curb this dollarization considering the context of pandemic.
First of all, we should mention that a number of important macroprudential measures have already been introduced, and it really bears fruit, and we see it. So in 2019, the responsible lending regulation was introduced, as you know, when the PDIs and LTV limits were imposed for loans to households. And these are different for lari loans and for foreign currency loans. And in foreign currency, the restrictions are tighter so that borrowers could sustain some further depreciation of lari. Also, as you know, this 200,000 lari floor.
Yes, larization post.
Yeah, and in retail, we see that the dollarization really decreased and now it's 40%. So, however, this issue with the availability of long-term lari funding, it still remains an obstacle to continue with de-dollarizing the banking sector. The recent creation of pension funds is a good initiative. Also, some recent changes of reserve requirements. So they might help to further increase the volume of lari funding in the system. Probably a development of the local capital markets could also be helpful, but these are the things that are still yet to be achieved.
Yes, this is a lengthy process indeed. How would you explain, and you mentioned this strong profitability of Georgia's banking sector, what explains this strong profitability in the times of pandemic?
The performance of Georgian banks in 2020 was really undermined by this one-off provisions created in March 2020. And actually, the sector in 2020 was barely break-even. However, if we look on a pre-impairment basis, before this sizable one-off reserves, the decline in profitability was pretty low, as we see a marginal decrease in net interest income and net fee income declined by about 10%. So there is a number of reasons behind the rapid good return to good performance this year, and probably the main one is the asset quality resilience. So the immediate pressures on the borrowers during the pandemic were somewhat eased by the direct support of the state, and we estimate it was equal to about 8% of GDP. And also, of course, the debt relief measures offered by Georgian banks, these credit holidays. It all helped to reduce the borrowers pressures on the borrowers during the health crisis. The strong economic growth also supported banks' revenues generation capacity this year, as we see a rise in fee incomes, an increase in business activity, higher credit demand, and it all supports good performance and profitability prospects for Georgian banks.
On the other hand, we can say that new lending is limited, right?
I would say that new lending, it indeed moderated. And so there are several reasons behind that, not just the pandemic. The tighter regulations in the retail segment maybe is a first and quite important driver for lower credit growth. The second one is probably the already high indebtedness of the corporate segment. It's the overall, this sector corporate debt is equal to about 70% of GDP, and about half of that is sourced from externally. But that mainly relates really to larger corporate borrowers, to a less extent to SMEs. So at this stage, we probably should expect the main driver for credit growth in the future to be the SMEs and the micro segments, as they should compensate the Georgian banks for the narrowing margins because of higher or lower growth in retail. We believe that the banks, they really have quite prudent underwriting practices, and they watch the financial conditions of the borrowers pretty closely. So we should not expect banks to offer credit to SMEs where the leverage is already pretty high. Also, as a credit risk mitigator, there are still some credit guarantees offered by the state for SMEs. So it should also help and support growth in SME segment.
Credit in lari today is more expensive because of the tighter monetary policy, right? So is that a factor as well?
The lending to SMEs and micro is both in lari and in foreign currency, because due to high like dollarization of funding, banks still need to issue loans in foreign currencies. So that is not just in only in lari.
What does the fact that you have highlighted in the recent report that lending penetration has more than doubled in the past decade and is now above our peers in the region, say about Georgia's lending environment in general and Georgia's banking sector?
Basically says that the Georgian banking sector has been developing very actively over the past decades, and that the economic growth was pretty high, resulting in rapid credit growth. That was particularly fast in retail, and which is why the National Bank issued and introduced certain measures to curb higher growth in retail. So I would say that high lending penetration effectively means that lending growth is likely to slow down in the medium term, and we expect that it should be more aligned with the nominal growth of the GDP in the country. From the credit perspective, probably it is a positive thing.
From the economic growth perspective?
It's normal when the credit growth is in line with the nominal GDP growth. From the profitability perspective, maybe the banks will not report like excessive revenues or excessive profits because of lower growth in retail, lower growth in very high margin segments, but we still expect the banks to report quite strong double-digit return on average equity.
When can we start about the post-pandemic period for Georgia's banks, or has it already come, or what is the perspective in that direction?
Yeah, I hope I could answer that. It is already there, but unfortunately, it will really depend on the further path of the health crisis. The National Bank announced that they expect Georgian banks to return to the pre-pandemic capital levels already in 2022. Yeah, so maybe that would be the period when we can say that things have returned back to normal and the post-pandemic period is now here.
The Checkpoint is presented by GM Pharma, the first international multinational pharmaceutical company in Georgia. GM Pharma, to serve those who need it most.